Wide range of opinion about what's going on.
Right. Now, best and final means no negotiation. Well, Brett Taylor represents the shareholders. He can't do that. You can't just say, hey, you know what? We'll take it. You can't. That's not fair to the shareholders. And I think we keep in all the coverage this morning. I've not heard about the shareholders needing protection from Elon. He can't steal the company. Even if he thinks he has a better idea, that doesn't get him to be able to take the company. So I've left out I'd like to ask David, because I think this is really important. David, there's a fiduciary duty to the board. And they cannot abdicate just because they got a best and final deal. This is not a piece of real. He's not buying a house here.
Jim, I think you're right on the key question that's come up any number of times already in the calls that I've had this morning. Best and final. The use of that term, which we rarely, if ever, see. Certainly in an unsolicited bid of this nature and the initial unsolicited bid. You know, you use this term in the UK and you're stuck with it. That's it. Here, of course, given it's Musk in particular, there is a level of unpredictability that we all know is quite high. But nonetheless, the use of that term best and final, and to your point, this board, which, by the way, I can tell you is going to be having an initial meeting at 10 a.m. this morning, from what I understand, is going to have to consider what that means. And, you know, is it Buffett-esque, Jim, in a sense? Because remember, when Warren typically approaches a management, he often has that as an unsaid condition. You know, hey, this is it. Take it or leave it. But the take it or leave it best and final part of this is a key. And I do agree with you in that I don't quite understand what the board is left to do here, because typically they're not going to say, OK, thank you so much for paying this price. It's over and done with. Of course not. No board would do that. You might begin an auction. You might consider if there are any other strategic alternatives. But on the other side, you might just say, no, thank you. And then the question is what Musk really does. The alternative, though, could mean, Jim, and I'll leave this to you, that the stock goes down an awful lot, particularly if he sells it.
Well, I don't think this board is taking that short-term review. By the way, David, if I were advising this board, I would say there may be personal liability if they agree to this. This is one of those where they literally are not doing their job. There's no fiduciary responsibility if they just say, you know what, we take it. David, that opens them up. And you remember, there are times when individual directors are opened up for a level of lack of fiduciary that I think crosses the line. This crosses the line.
Well, listen, they all have D&O insurance. You know, today, I'm sure Wilson Sonsini is going to, the law firm which advises Twitter's board, and I think will be involved here, will certainly probably be front and center, more so than any bankers or advice they'd be getting on the financial side of it. It is, you know, what do we do here? What is the sort of the, from an M&A and legal perspective, the right thing to do as the board? Typically, you'd open up a conversation which would include price. Oftentimes, of course, that would already have taken place prior to this. But this is unique. This is Musk. He already owns 9.2% of the company. He's already spent billions. Another key question, I know it sounds funny to ask it of the world's richest man, but nonetheless is financing. You know, why not include in your offer something that gives an indication that you've already got it locked down, that you're going to offer up stock that you're going to get collateralized, that you're going to borrow against, that you're going to sell some certain amount of shares, something that gives everybody and that board the sense, Jim and Carl, that, OK, you know, this is a fully financed offer. Again, he is the richest man in the world. He's got the opportunity to do it. One would think, why would he want to actually do it all in equity? You'd expect that he'd want to use some debt here to buy this thing outright for $43 billion and write a check or sell shares to equal that amount of money seems kind of odd as well. So that's another question that I would have thought at least financing would have been addressed in his brief letter to Brett Taylor.
Yeah, and Carl, it's erratic. It's erratic behavior. It's not what people expect. That's a serious board. It's not a hack board. A lot of people felt that he controlled his own board. Maybe he thinks that that's what they've got here. They have no choice but to reject it. I think they can say, look, we're open to all offers. But beyond that, Carl, if they say we accept, they're phony.
Right.
And they're not phony.
Well, that's why we got two downgrades this morning, CFRA and OPI, which I know you've got to know. They take it to market perform. And the general theory is likelihood that he does walk away and that the shares tumble from there.